All right, let's talk a little bit about Hippo Holdings. Now, I like this company, but for reasons that you might not expect. So let's get right into some analysis with regards to this company. Briefly, it's an insurance tech company. I've covered a lot of those here on this channel, and this one is a little bit different in some regards, although I like a lot of what I see, and I'm gonna try to summarize all of the research that I've done here over the past few days. Starting off, let's take a quick look at stock price and market cap. Just like so many other insurance tech companies, stock price here massively collapsed back in 2021. You will see this for all of them. Lemonade, Porch, it was just a bad time. Interest rates went down and yeah, you know the drill. I mean, interest rate went up and they got a different price to earnings. The market, it stepped away from just valuing growth to looking more at profitability, and it was all around a bad time for many growth stocks. It was a bear market that created a ton of opportunities. Now, this opportunity, Hippo Holding, it has a market cap of only 717 million American dollars, so not even a $1 billion company. Absolutely tiny company. It has 20 something percent insider ownership, so substantial amount of skin in the game for management in this case. I listened in a little bit on an interview from the CEO of this company. He used to be head of insurance. He became the CEO when the company went public. And he talked about being adjusted EBITDA positive last year and then having the guidance that they were gonna be basically normal accounting, so GAAP accounting profitable around this time. And did they manage it? Well, let's take a quick look at some of the numbers. Amazing growth, by the way. Before we look at those most recent numbers, just take a look at this from 2021 when stock price was absolutely massive. This was a completely different multiple back in the day. This is in thousands of dollars. So we're basically looking at 91 million in revenue in this case, absolutely nothing. And then it has grown very aggressively, and we can see that, for example, for 2024, 372, and then for year to date, not including Q4 here yet, obviously, we see very strong performance of 450 million. So in terms of the market cap, remember, roughly 700 million. I think they can get revenue pretty close to that, 450. And we take a look at here, 120 for the last quarter. It's reasonable to assume something similar. Let's add these two together. We get roughly 600, something like this. Yeah, slightly below the total market cap for the full year of 2025. Likely, they've had very strong growth, and it's hard really to guess profitability on a company like this. You know, they had some catastrophic weather exposure. They still have this. They are a very, very risky play. So it's a very high risk level on this company. All right, I promise to take a quick look at profitability here. So we see total revenue, for example, and then expenses and pre-tax income. And we see very strong earnings per share numbers here for the latest quarter, $3.90. But you can see that this is sort of all over the place. They had a slow quarter, the quarter before that, and then they had a quarter with negative results. There was some catastrophic weather events in this quarter. I remember specifically from covering Porch. And we can see, for example, yeah, good quarter here. Q4 historically a very good quarter for Hippo as well. Just like other insurance companies, insurance tech companies, Q4 historically very strong. But earnings per share all over the place. And man, just for the quarter, 390. If they get some more consistency on it, they would have very, very strong profitability indeed. So they have recently flipped profitable. This is recently. This was not the case if we look back on the annual basis. We can see that they struggled for a long time with profitability here. Huge losses in 2021, and then the losses just started to decrease as they grew revenue and got those advantages of scale. And we see that as for now, they have just flipped that switch and turned profitable. Although this profitability is very fragile, they are exposed to catastrophic weather events still. They do not have that security that a reciprocal exchange offers. Although they are pulling a lot of growth levers, they are doing partnerships with agents, and we can see this from the CEO coming from an insurance background and having that experience, really pulling on the growth levers. They are also acting as an agent, so not necessarily writing the Hippo insurance if a customer comes to them, but perhaps offering another type of insurance. So they are pulling this growth lever. They are. And in terms of dilution, let's take a look at annual here. Yes, annual. We can see, so this is not in thousands. This is, yes, all numbers in thousands. All right. They are diluting. Oh, they diluted a lot back in the day, just like many insurance tech companies. Although dilution has slowed down, but it's still significant. Although we have to put this into relationship with earnings per share and see if they actually outgrow the dilution. This has not been the case in the past. Let's take a look at stock price. Yeah, it's definitely been punished for it. But as of recent time, for now, they are indeed outgrowing it. And we could see hints of this already back in 2024. Yeah, that's when the stock started to increase slightly. Let's see. I wish there was a 3-year interval I could select here on the stock price for Google. So very, very cheap in terms of price to earnings valuation. This is the case because there is a lot of risk. This profitability is very fragile. Although in terms of home insurance, my opinion and my belief is that there's plenty of opportunity for all players in this space. Lemonade has plenty of opportunity, Porch has plenty of opportunity, Hippo has plenty of opportunity. And eventually there will be a rising tide that lifts all boats in this sector once these continue to take market share, continue to show profitability, and the market will simply have to re-evaluate them. One of the things that Hippo does very well is that they not only are in the claims business, but also in the prevention business. So, for example, a story the CEO told was that when they did the initial pitching to investors, they were on an investing call, and the CFO at the time got an alarm on his phone that he had to run off to during the presentation, and it was a pipe in his sink that had broken and water started to leak out. So he just ran down, shut it off, wiped a little bit, and was back in 10 minutes. So this was from a Hippo sensor that alerted him on his phone that, all right, something's happening here, go check it out. So investor obviously believed it was staged. Definitely sounds like a staged story, but the CEO in this case swears on the truth of it. And these are the type of innovations that we desperately need in the insurance sector. The insurance sector has been around for hundreds and hundreds of years. Traces back to merchant fleets of ancient Europe, basically. And there hasn't been a whole lot of innovation in this space for a very, very long time. So happy to see another player in this insurance tech area. They are definitely getting some traction now and turning things around for the company. This could be an absolute home run with 10x potential, although there is big risk for a black swan event also, in terms of catastrophic weather events being a risk to the business. They are taking on a lot of risk, and that's just the way it is here. We have to remember most businesses fail, but if it manages to survive like so many other insurance tech companies, well, then I believe we are looking at the absolute home run in this case. All right, that's been it for this video, and as always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.